Good afternoon, everybody, and welcome to this week's Lunch and Learn webinar. We run weekly webinars aimed to provide advice and share knowledge on key business topics and specialist areas. Joining me today is Select Member Andy Phillips from Andrew Phillips Insurance Brokers, and today he's going to host the webinar entitled Top Tips to Get Your Business Insurance Claim Paid. Andy, would you like to tell us a little bit more about the work you do at Andy Phillips Insurance Brokers?
Yeah, good afternoon everybody, and thanks for logging into this webinar on such a beautiful day. My business is all about helping businesses to protect themselves. Let's face it, insurance is not the most exciting subject, so I help them to navigate through the insurance maze and give them advice on the insurances that they must have, should have and could have.
Thanks, Andy. Before we start the webinar, can I ask you all to use the question mark function on your screen to post any questions or queries that you might have, and Andy will answer these at the end of the session. So I'm going to move over to Andy now.
Thanks, Laura. Right, well, as I said, I'm here to help businesses navigate through the insurance maze, and I like to think that I'm on a bit of a mission to help businesses avoid mediocre insurance, because when you pay premiums, I believe that you deserve more than an average type policy. Agenda for today, I'm going to run through fairly briefly the types of insurance that a business might need, how to reduce some of those dreaded insurance costs, and some of the common mistakes that I've found in the past with actual clients that I've taken on. And this has been very much done through research with new clients in the last sort of 6-12 months, when I found that probably 60% of those businesses that came to me for the first time had something pretty fundamentally wrong with their insurance protection. Some things relatively minor, some things could have been quite showstoppers for that business and quite financially impeding for them. So there's 4 principal types of insurance that we help businesses with. Business assets, the financial risks that a business faces, the liabilities that a company can incur, whether it's from employees or other people. And then finally, probably your most important asset, your staff, and how to protect them and how they can be protected. Firstly, though, looking at the business assets. Buildings and tenants improvements is the first item on the list. Buildings is more important, obviously, if you're a property owner or you own the building in which your business is based. But tenants improvements cover is also very important if you are a tenant in another property. A lot of people don't realise that that cover. A lot of people overlook that cover when they come to arrange their business insurance. Contents and machinery, that can be anything from a stapler in an office right through to a piece of machinery that costs several £100,000. Your computer equipment, whether that be an iPad, a laptop, or a server. Of course, servers are getting a little less common these days with cloud computing, but still very important. Stock cover is there to protect, well, everything all the way through, from the raw materials that are delivered to your premises, work in progress as you're doing what you do to them, and then the finished goods that are awaiting shipment to your customers. Money, that can be anything from petty cash through to a business that takes a lot of cash in their business through sales. And whilst we are becoming less of a cash society, there's still lots of times where significant sums of money can come into to a business. There are still occasions where customers pay significant sums for the product they're buying, so it's worth protecting yourself against that sort of issue of loss or hold up. Goods in transit cover, that can be both goods that you pick up and deliver in your own vehicles, whether it be a car or a van, or it could even be goods that you dispatch using a carrier or some sort of courier to your customers. And that can be goods just going within the UK, just down the road, or to the other side of the world. And then finally, vehicles. Well, that's either business cars or commercial vehicles, vans, trucks, forklift trucks, JCBs, and the like. The financial risks that a business faces come in three areas, really depending on the type of business you're running. Loss of profits insurance is more suitable for manufacturers, so they take in a raw material that might cost them £100,000 a year. They then do something to that raw material, turn it into something else, and sell it off for, say, £200,000 a year. And principally, the insurance is there to protect the difference between their turnover and the loss that's made if say a fire occurs. Loss of revenue insurance is more based at the service sector, where perhaps they're not actually manufacturing widgets. It could be anything from an office-based business through to another company where they're providing some sort of service, where their revenue is the most important thing, and if they suffer from, say, a fire or a storm damage to their building which prevents them from working, they're going to see an immediate drop in their level of income. And then finally, what's called additional costs of working. That's more suitable for possibly an office type business where the business can keep functioning even if their premises was severely damaged by, say, a fire. They can perhaps find somewhere else to work very quickly. It could be for a business where most of their income is earned away from their office base. And what it covers is if, for example, your premises is damaged, you might have to rent additional accommodation, another office. So you might be paying £500 a month for your office space. You have to find somewhere short term to use, which might cost you £1,000 a month. And the principle is that the insurer will cover the difference between that £1,000 and the normal £500 that you might have to pay. Moving on to the liability insurances. Employer's liability is the one that a lot of people know about. If you're employing staff, you have a legal obligation. That's compulsory to have that cover, and you can be fined something like £2,500 a day whilst you don't have that sort of cover in place. Public liability insurance covers you against injury caused to visitors to your premises, or injury to people you might cause whilst you're out on someone's site, and it also covers damage to other people's property. So, for example, if you're wandering around a factory and you push something through a monitor on a computer, it will cover that sort of damage. Product liability applies if you're producing something or selling a product to your customer, and that customer alleges that your product has caused them some sort of injury or damage through it being defective. The insurance will cover the legal costs in defending you and any award that's made against you. Professional indemnity cover is more to do with businesses that provide some sort of advice or service, and it protects the business if your client alleges that the advice you've given has been wrong or it caused them some sort of financial loss. Again, the insurer will step in, cover the defence costs, and if the case is lost, then they will pay the award that's made against you up to your limit of indemnity. And then finally, important one but often overlooked for directors of companies. If you are a director, your risk isn't just the value of your shareholding, you can be held personally accountable, personally liable for a wrongful act. Now that can be to do with an employment matter, it can be to do with a health and safety breach, or financial mismanagement of your business. You could find that shareholders or other interested parties can take an action not only against your company, but also against the directors involved. And then finally, staff insurances. Some people might regard this as a bit of pink and fluffy, but you can provide against employees being injured or taken ill, and it can either provide a lump sum or a weekly benefit for up to a certain period of time if they're taken ill or have an accident. Business travel insurance. More and more businesses going abroad these days on business, so it's important to protect your employees against things like medical expenses, cancellation costs, baggage, etc., if that's damaged whilst you're away. And then finally, on the private medical insurance, things like Bupa, AXA, PPP can all provide cover to help your businesses running effectively and keeping your staff healthy and at work, rather than having to be off waiting for some sort of surgery. Reducing costs. Obviously, it's important when it comes to insurance to keep your costs under control. It can be quite a significant part of any company's expenditure. And the list there shows quite a wide-ranging types of things we can look at to reduce a business's insurance costs. Some of them are more quantitative. You could say that some insurers will give X% discount for a certain sort of security. Some of them, it's more a case of giving the insurer a good impression about how your business is run. If they see that you've got good employment procedures and you do driver training, they get a better impression of what your company is like and your whole attitude to business, and they will take that into account when pricing your insurance. But the other things like security and taking a larger excess, implementing a fire alarm system, those all help to reduce your costs. And of course, you would expect me to say the last one on the list, independent advice. That's the one where a broker gets involved and can really negotiate on your behalf to get the best deal from the whole range of insurers that they'll deal with. Right, just wanted to move on to some of these common mistakes that I found in dealing with new clients I've picked up. And I wanted to do it through using actual examples to try and make it a little bit more interesting on this lovely warm sunny afternoon. Getting the wrong business description. It sounds very minor, but insurance is all based on what the insurance company understands that you do. And if you get your business description wrong, they're not going to cover you for the activities they don't know about. I had an example a couple of years ago where a business was involved in web hosting, they did web development and IT consultancy, but on their insurance documents they were described as online sales. Something totally irrelevant to what they do, and it really ran them the risk of not being protected if they'd had to make a claim for, say, professional indemnity. Tenants improvements. That photo there you can see, that's a client of mine, previous premises they had. They were a tenant in a building. They'd spent about £10,000 putting in that office section, little kitchen, toilets, etc. And they didn't have that insured. So if there'd been a fire, the landlord would have put up the framework and the building itself, but they would have been left out of pocket for having to replace that office unit inside. The indemnity period, that's something that's relevant to your business interruption insurance. And basically what it means is if you have say a fire today, the insurer will cover your loss of profit or your loss of revenue for up to, say, 12 months or 18 months or even longer. And it continues to pay until you're back at the level of turnover you were at prior to the damage. Now, the reason I've shown that particular machine there is that a lot of people think, oh, well, I'll be able to repair and rebuild the property and get operating again within a matter of months. But if you've got a particularly complicated piece of machinery which has a a long delivery time. A lot of things like this come from, say, Germany or the Far East. If you've got to wait 8 or 9 months before you can get a replacement machine, you're not going to hope to start producing your product again until that comes into place. And then it's going to take you a long time to get back to that pre-damage level of turnover again. Warranties and conditions. A lot of people don't like small print in insurance policies, but that's what you employ a broker for. This photo here, I don't know if you can quite see it, but in the back left-hand corner, there's a bit of electronic gizmo. That's a charging machine for a forklift truck. I went in to see this client, and their policy documents showed that when they were charging their forklift truck, they had to have it at least 3 meters away from any other equipment or stock. Now, that particular bay of that warehouse, it's about 3 meters across altogether. So by the time you've got the forklift truck in there, they are very, very close to all that nice flammable packaging. So we had to have a debate and a conversation with the insurer to get them to waive that particular condition, and we were able to do that. But it means that client's got proper protection. Electrics. It's important to make sure your electrics are inspected regularly. It's not just from an insurance point of view. The knock-on effects of electrical fires are immense. It's not just the damage itself. You can be talking about electrocution of your staff, which then results in the health and safety executive coming in. That means personal accountability to directors, possibly fines and imprisonment. So getting your electric system maintained is a key thing, particularly for manufacturing and commercial type premises. Security, that was a little unit I went to. They had a lovely strong knot, padlock and chain around that. Their insurer, in their policy documents, required that they had a hardened padlock. It had to be a 5-lever close shackle, what's called a 5-lever close shackle padlock, and a steel hasp to lock that door to the frame of the building. That clearly wasn't the case. So if they'd had a break-in, they wouldn't have been covered. Simple as that. Vehicle insurance, I come across this quite often. People have their car insurance. They have a policy with an online insurer which covers them for social pleasure purposes and commuting to and from work, but they don't have insurance for using the car on business. And yeah, again, if you're driving a car and you find yourself talking to an officer of the law, you could find yourself in difficulty. But then enough of Laura's car. We'll move on from there. Sums insured. This is the most common problem I come up against. People have a misconception about what they should be insured for, and they think, well, I'm never going to have a total loss. And yes, that's true. It's very unlikely you're going to suffer a total loss of your property, and they therefore think that my sum insured of £50,000 is sufficient because I'd be able to replace most things for that. The trouble is, if you have any sort of major claim, the insurer will come in and assess what your value is at risk. So, for example, if you've had a piece of equipment damage which might cost £10,000 to replace, the insurer comes in, they look at your sum insured, which might be say £50,000. If they think that the true cost of replacing all of your contents was £100,000, they're going to say you're underinsured by a half. And therefore your claim for £10,000 could get reduced to £5,000 because you're not paying a full premium for the risk that's being run. So it's really, really important to get those sums insured adequate. Geographical limits. This is for covering any equipment that you take away from your business. You can run your own risk. You can just insure your equipment whilst it's in the office or in the business premises. But you can also extend to cover, say, computer equipment, photographic equipment, tools, etc., outside the premises in the UK, in the EU, or even worldwide, if that's what you need. And then finally, looking at risk assessments, often regarded by businesses as a bit of a dirty phrase. but they're really, really important. Every employer should be doing even some basic risk assessments on the risks that their business faces, looking at the likelihood that something might happen, such as a fire or a slip or a trip by an employee, and then thinking about what impact that would have. Would it be a major impact, or is it just a minor inconvenience? And then you have to react accordingly. Now that picture there shows quite a complex risk assessment matrix. You don't need to have anything like that. There are some really simple help documents at the Health and Safety Exec website. If you go to www.hse.gov.uk, there's actually a really quick online assessment that you can complete. You go through your business, looking at different aspects, and it just keeps your business healthy. And then if something never would happen, but if something did happen, then you've got something to back up your good practice in the business. So that's a very, very quick run through. Hope you're still all awake. I'll take any questions that you may have.
Great, thank you, Andy. Let's see what questions we've got. Okay. Andy, please could you speak to me about my insurance? Last time I left it too late. Thank you for that. We'll I think that's Dave there. We'll get your details and I'll get Andy to give you a call a bit later on. We've had another question here. Can you tell us the difference, please, Andy, between PI and PL?
Yeah, it's that's an often misunderstood set of insurances. PL, public liability insurance, protects the business against injury or damage that someone else suffers arising out of your business. So, client comes to your premises, they trip over a cable and break their arm. You go out on a customer's site and you damage their property. You connect something that you shouldn't have connected, perhaps, and they take action against you for that injury or damage. So the insurance then covers the legal costs in defending you and the award that's made against you. Professional indemnity is all about advice. So it's not a physical injury. It's not a damage to property. It's a financial loss that your customer suffers as a result of your alleged bad advice or not doing what your contract says you should have done. Okay,
hope that answers that one. I have another one here. If you are in breach of the Data Protection Act, will this invalidate your computer insurance cover, i.e. your laptop is stolen from your car and you lose data? Can you still claim for loss and claims your customers may have against you due to their data being stolen?
That's an interesting question. Yeah. It wouldn't invalidate your insurance. You would need to have the right sort of insurance. Now, there's lots of new covers coming into the market about cyber risks. I would have to say a conventional type of insurance wouldn't necessarily cover all those types of loss. But if you've lost clients' documents from a system, then if you've got professional indemnity insurance, that will cover that. But depending on your type of business, you may need to have some wider cyber risks insurance, which covers loss of data, replacement of data, and perhaps even a fine that the Information Commissioner might apply against you.
Okay, thank you. Next one, how can I cover the cost of wages if my staff are ill?
Right, well that comes back to the staff protection part of the presentation. You can have what's called personal accident and illness insurance. That will cover a weekly benefit if your employee is taken ill, and you can use that either to cover their salary costs or cover the cost of a replacement employee. It depends on how generous an employer you are, really.
Okay. And one from me, Andy. What's the most unusual claim you've ever dealt with?
Right, okay. That was several years ago. I would say it's a client I have that they manufacture I'll say a security product, and they exported it to the USA. The customer over there, who was a wholesaler, adapted that product and sold it on, and it then caused an injury to the person using that security product.
Oh dear.
That resulted, I mean, this is all down to the USA strange legal system, and that actually cost the insurer several £100,000 just literally to get rid of the claim, because our client in the UK wasn't responsible, but because of the US laws, it was cheaper just to pay up to get the claim settled.
Be done.
Yeah.
Be done.
Yeah.
That's great. Thank you. We haven't had any further questions, so I'd like to say a big thank you to Andy. Thank you for a brilliant session. I'm going to be sending out a copy of the presentation and Andy's contact details for those of you that don't have them a bit later on today. So thank you for joining us. We hope you can make next week's webinar. Put it in your diary. It's every Tuesday at 12:30. So on behalf of Andy and myself, we hope you don't melt in the sun this afternoon, and we look forward to seeing you soon. Thank you for your time, everyone.
Thank you.